Hey, folks, you just heard that big news about the team going over there. Meantime, to the Chinese counterparts, that can influence Fed also. But in the meantime, a Treasury spokesperson telling Fox Business that he cannot confirm that Secretary Mnuchin is going to Beijing next week. Stocks, though, touching sessions highs, and we're still hovering around there as there are reports that U.S. negotiators are heading to China Monday for these face-to-face meetings on trade. We've been hearing from Mnuchin and others that eventually it will happen. In the meantime, what is happening is that the earnings parade continues to roll on, and most companies are beating. In fact, a lot of them beating on revenue, earnings, and increasing guidance higher. And it's not just blue chips like Coke or United Technologies. Household names, Sherwin-Williams, Stanley Black & Decker. Now we're looking ahead. We got these big tech names. They report later in the week, Facebook, Amazon, Google's parent company, Alphabet. So with all these stocks soaring near record highs, the question that most people want to know, is it too late? I brought in two of the best to answer that. Bell Point's chief strategist, David Nelson, and Nicholas Wealth Management president, David Nicholas. Let me go with last names, gentlemen. You'll understand why. Nicholas, first of all, your thoughts on the earnings season thus far?
You know, Charles, I think it's been good so far. Look, everyone's been saying there's clouds out there, there's a storm coming. You know what? We haven't seen the storm yet. So I think one of the best things going for earnings season is expectations were lower. And I think once you get these beat in earnings, that can really push the markets higher. So absent of a trade deal, I really think earnings is the only thing that we have to push this market higher. So I'm excited. There's still the verdicts out there, but I like what I see so far.
Nelson, it's not just that they're beating vis-a-vis the lowered expectations. I think we thought these hurdles were lower. These are coming in exceptionally well, and this may not be the quarter with the earnings recession that we were warned it was going to be.
There's always standards out there. You know, you've got some names like Hasbro just exploding today. A lot of that is on the heels of a lot of shorts in this name, and this is a company that probably an old line company that should probably not be able to compete in this world. Is actually one of the best performers in the S&P 500 for the last decade.
So then let me ask you, because this brings me to a question that everyone's asking. They ask me all the time. I'm going to ask you guys. In this environment, you know, today's all-time high could be a year from now. It could look like it was a great entry point. How do you differentiate that? You know, listen, Hasbro, I have in our model portfolio. Sherwin-Williams in my model portfolio. These are at all-time highs, and some people are buying them today.
Look, market timing is a two-step process. So you may even be able to get out and avoid a correction. But what's going to be that catalyst to get back in? For most, down 10, 20% in a stock isn't going to get you in.
But I'm not asking about buying the dip. When do you buy the stocks on the upside? Because how many people are waiting for the dip since March of 2009?
Often buying the good news is the best thing that you can do. Buying stocks at, 52-week lows is probably down there for a reason. Buy these stocks that are breaking out if the earnings projections are still headed high.
Nicholas, your thoughts on that?
Yeah, so I think it does come down to earnings. I would love to see some type of pullback so that we can get a good entry, but we're probably not going to see it. I mean, if the Feds, we've all think the Feds are raising rates. I think they will, lowering rates. If they don't, we might see a pullback there. But I just think you need to look for companies that have solid earnings that are continue to grow their earnings and revenue.
So you're not concerned when they're already at all-time highs or something like that? If the fundamentals are changing, you do have concerns. So you're looking for value.
If you're a retirement investor, you're within 10 years of retirement, I do think you should have some concern right now because
so let's talk
markets
about that, Nicholas, because on the value side today, financials look great, not necessarily for any reason. I'm looking at Parker Hannifin, up $5. Goldman downgraded this to a sell last week. Is that what you're talking about? People are going in there like yourself, maybe saying, hey, this has been too harsh of a reaction and there's some value here?
I think value is where we'll see most opportunity going forward. I like dividend payers. So if a company's consistently raising their dividend, consistently having strong earnings, those are the companies that I like to see in our portfolio. The growth plays have done great this year, but that's where you have to be careful in some of these big high flyers when markets are at levels like this.
They've done great for almost a decade at this point.
So. On that note, let's end on that note, guys, with a minute to go. The big names that are reporting, the big Momo darlings, the Facebooks, the Alphabet, Googles of the world. Any of these intriguing to you going into earnings?
All of those are good names. So I think the biggest risk for some of these names are regulatory. There's calls to break up a Facebook, even in Alphabet. I look at a company like Alphabet. Here's a company, I question its allegiance. They seem to have no trouble working with the Chinese government to get back into China, but they have a lot of trouble working with our own military. Amazon, that's a bellwether stock, certainly a make or break for any quarter. I own the name, and I'll likely stick with it.
David Nicholas, I know you just kind of expressed some reservations about these momentum names.
I do. I'll throw out something like a Ford, for example. If you're a retiree investor, you want a company that has good outlook, a 6% dividend. A company like Ford is something you really should consider in your portfolio.
Well, full disclosure, that's in my model portfolio, too, and I agree. If that brings $12, I think we're off to the races. David, by the way, love the suit, my man. We'll talk to you real soon.
Thank you.
All right.